about tax cuts and tariffs, Treasury yields go up. That's right. So no, don't believe for one moment that inflation is coming down. It's not. When it turns negative, then you know it's coming down. The other thing too, for example, what's going to take this market down though eventually is the tourist traders have no idea the valuations of these stocks are insane. Do you know for 50 years our PE ratio or the valuation of the S&P has been about 20, 23? 50 years. That's the average. You know what it's hitting right now? 29, 30. Our valuations are nuts. Why do you think the institutions are dumping their tech stocks as fast as they can? We haven't seen dump tech stocks like this, the insiders, the big institutions since 2016. But guess who's there to buy on the dip? The tourist. Listen, they tell them, buy on the dip, buy on the dip. Listen, here we go. It's the last thing you should do because we're peaking.
There's a tremendous amount of cash on the sidelines, so really any dip should be used as a buying opportunity.
She should be shot for being stupid. There should be a crime against stupid. You don't tell people to do that. You're going to lose money. Especially, you don't tell people to go start buying stocks when valuations are insane. And that's where we are right now. So I said, it's awful. It must be a coincidence, or I may be dumb. But why is it all of a sudden they give us a phenomenal jobs number, and then the market goes down 700 points, and they say because inflation's coming down. And by the way, the 700-point drop was a few hours away from Biden speaking his last speech. Was it a coincidence? I don't think so. I think it was planned. So again, that 700-point rally that we had, I think what's going to happen is we're going to rally some more. And I think that after the inauguration, maybe for 2-3 days, I think we're going to have a big rally. I think everything's going to go up from Bitcoin to gold. I mean, everything's just going to go nuts and go up because everybody's going to be partying. But then be prepared, okay, for the market to come down. But you don't have to worry, well, when should I buy, when should I sell? Because the answer is in following the money. That's all you got to do. You haven't got to follow fundamentals. Everybody thinks they got to follow all these fundamentals and they run out and hire a broker. I got to follow fundamentals. That's all I hear, fundamentals. You haven't got to follow fundamentals. Not at all. All you got to do is follow the money. But see, nobody's going to tell you that because they want you to go get a broker. You don't have to follow fundamentals. And how do you follow the money? It's easy. And I designed a chart 25 years ago to make it real easy. Because, for example, you remember when they had DE, John Deere. They came out with John Deere. And they said, oh my God, look at John Deere. It's going straight up. I got to get in. Well, you're going to lose money on John Deere. Because why? Well, because my chart shows that as the stock is rallying right now, it's short covering. It's not investors, not new money coming in, and it's going to come back down because it's showing there's not enough money going in. See, what that happened was institutions are taking their money out of tech stocks and they're putting it into industrials. They're putting it into those areas of the market that were terrible performers last year. So it's called parking money. And that's why you had that big move on John Deere on January 13th. And everybody jumped in. The tourists jumped in, buying a dip, they're told. But they're going to get hurt. And the evidence you can see, it hasn't made a new high yet. So again, when you're trading a stock, you want to know, okay, before I buy that stock, I need to see the volume is good, and I need to have proof. I need to have proof that enough money is going into that stock from whom? The institutional money. And that's what we designed as a chart 25 years ago. We'll show you how to use it. You can use it free for 10 days. So the bottom line is right now, we're peaking in the market. The valuations are insane. They should be at 23. We're heading out towards 30. Insane. Oh, we're probably at 30 right now. Maybe really check it out, see what the PE ratios are. But I bet we're close to 30. So be careful. If you're listening to me right now, I would start taking profits into this rally. Leave some shares on to see if they're going to rally this one more time in the happy talk.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from. All that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
Hi, I'm Phil Grande of philsgang.com. Over the years, I've successfully taught tens of thousands of investors how to navigate the market with confidence. Become a Phil's Gang member and receive the training, the advice, and the software that will take your investing to the next level. I have a team comprised of successful investors, all with proven track records. And Phil's Gang software is easy to use, painless to navigate, and tells you exactly when to buy, when to sell, when to hold, when to run like hell, even short. Learn about common market mistakes and how to minimize them. You don't have to be a seasoned investor to benefit from Phil's Gang and platform. No matter what level investor you are, my strategies for investing are designed to put you on the path to success. Sign up for the 10-day free trial to see our platform in action. Avoid market pitfalls and start winning with Phil's Gang. Learn more at philsgang.com. That's philsgang.com.
Welcome back. Are you ready to make profits in the stock market? Why not check out philsgang.com or give us a call, 877-600-4264. Now, here's Phil.
And welcome back to Phil's Gang. Join my gang. It's free for 10 days. Enjoy the classes. You also learn what shorting is all about. And you'll learn how to follow the money, not the noise. This is the noise right here, this dope.
The consumer seems to be doing just fine. I mean, look at consumer spending. It's rip-roaring.
Isn't that amazing? What a lie that is. Isn't that an unbelievable lie? Consumers are rip-roaring? What consumers? The 101%, not to be confused with the top the 101%, not to be confused with the top 10%? No. 70% of our workforce is working paycheck to paycheck. They're dying. They're dying with debt. Credit cards, auto debt. And the problem is they're getting in worse shape because the 10-year Treasury yield keeps going up. And why does that 10-year Treasury yield keep going up, which pushes up interest rates? Because, again, we have a real problem. We have deficits. That pushes up the 10-year Treasury. We have tax cuts they want to come back in with. They have tariffs they're going to raise them. That causes it. Inflation, yields rise. That 10-year yield's a terrible thing because it does rise on deficits, and we can't get those deficits down. It does rise on inflation. We can't get inflation down. When they tell you inflation's coming down, it's not. Inflation is not accelerating as quickly, but it's not coming down. And by the way, the 10-year Treasury yield, everybody's all excited that it came down. It's going to go right back up. But first, this segment is sponsored by The Money Show. Now, The Money Show has been around for 50 years. 50 years. Great people. And there's going to be a money show in Las Vegas, February 17th to the 19th. Don't miss that. By the way, if you're going to go, and you should go, especially if you're out there, okay, just remember, call this number, and you get a ticket, a complimentary ticket. 1-800-970-4355. Just mention my name, so you're listening to my radio show or my podcast, both. 1-800-970-4355. 1-800-970-4355. Get a complimentary ticket. I mean, I want to tell you, this money show, okay, has been around for 50 years. 50 years. Are you kidding me? They do the best job, and everybody wants to be a guest. Keith Fitzgerald's out there. He's going to be there. Hogan, Dan Ives. I mean, you got all these people, bestsellers out there, authors, analysts, portfolio managers. Everybody wants to be part of this thing. They always are, because it has a great reputation, and they get thousands and thousands of people. So, again, remember, don't miss it. It's the Money Show, Las Vegas, February 17th to the 19th. And Kim Gittler, who started this thing 50 years ago, she knows how to put these together. Okay, so again, get that number, 1-800-970-4355, and you will get a complimentary ticket. And by the way, if you're a business person, what a great place to get exposure. Call that number and talk to them about participating in the exhibition. Get yourself a booth, for God's sakes. I mean, you'll never get that amount of people. It's unbelievable. I mean, cheaper than radio and everything else. All right, let's get back to what's going on here. So as I said, we have inflation, and remember what happened with that 700-point rally. What a bunch of BS that was. So they come out and they say, oh my God, did you see what's going on? So they said, the December core, year over year, came in at 3.2. The estimate came in lower, 3.3. So, year over year, they estimated 3.3, but it came in at 3.2. What celebration? But they didn't talk about the other one. They didn't talk about the December non-core. No, they didn't want to talk about that one, because that one showed that it came in high. It came in hot. It's supposed to be 2.7, came in 2.9, but they're not going to talk about that one. They just made everybody, hey, boy, this is great. Let's have a party. And bam, the market went up 700 points. Now, the problem, let's take a look at the 10-year Treasury yield. The 10-year Treasury yield, do not be fooled. I got my 10-year up here. I don't think I have it up here. Let's see, you can get up there for me, Willie, my 10-year Treasury yield. They're all missing now. Okay, all right, so here's the 10-year Treasury yield. Remember, the 10-year Treasury yield from September, okay, to just the other day, went up about 100 basis points, for God's sakes. So do you think just because they reported that inflation is coming down when it's not? It's not coming down. It's just accelerating slower. But it's not coming down. So don't believe that. We're going to go to 5%. And we're going to I think, even go higher than that. And also remember, we've never had a situation where we're just talking about it. What is the inverted yield curve? Thank you. This inverted yield curve, it's been inverted since July 2022. That's insane. We've never had an inverted yield curve that long. You know what that means? The recession is going to be a whopper. Going to hell of a recession. You watch and see. Never have we had an inverted yield curve that extended for that period of time. So that's not good news either. But people are going to ignore it. Traders are going to ignore that. So, and as I said, I think that when they came in with those phony numbers for inflation, remember how it works. They appoint the administration that's in the White House. They are charged with, they pick their own man to run the BLS. And then there's a finance guy that works directly for the president in the White House. And no number is released from the BLS unless that guy, and it's been under Biden, a guy by the name of Bernstein, Jared Bernstein, been with him for years. So when the BLS comes out with an inflation number, job numbers, whatever, they hand it to Bernstein first. It's never released, and then Bernstein tweaks it. Do you remember March 2022 to March 2023? They beefed up the job numbers by 813,000. It was fake. Well, they do this with all the numbers, because remember, the White House, okay, whoever's in it, there's elections going on all the time. You know, senators, congressmen, president, they got to keep raising money. And the big boys, the big people who give the money, they're not going to give money just because they like them. They want to see that the economy's doing well. So then they know, okay, boy, they got this economy on the right track. I'm going to make sure I'm going to give them another $1 million because I want this guy to stay in the White House. That's how it works. So they're under a lot of pressure in the White House to make sure these numbers are going up, that these numbers look great. And so they fudge them. But you shouldn't sit there and say, well, what do I do with a stock then? How do I know to buy a stock? It doesn't matter if the numbers are fudged. Before all this technology, if you go back to the 60s, the 70s, even the 80s, I mean, you had to really rely on the fundamentals of a company, its margins, free cash flow. I mean, you had to really pull stuff together to figure out what's going on. Well, now you haven't got to do that, because with the technology we have, we designed a chart that will follow the money. Because remember, the only thing that moves the market up is institutional money. Here, let me give you a great example how phony the market is. But you can make a fortune in the market if you just get rid of the idea of fundamentals and follow the money. And who's the money? Hedge funds, okay? You got the big banks, the biggest banks, especially investment banks. You got ETFs. You got mutual funds. They have all the money. So think about this. From 2009 to 2022, the market went up about 600 to 700%. Do you know what the average rate was? The average rate was 0.8. 0.8. So think of it. 1%, okay, is 100 points. It's 0.08. It didn't even go to, we had it once at 158, 1.58. But the market rally from 2008 up to January 2022, and the only one time we had a rate was above, let's say, even a quarter, was on 2020 when we had COVID. The only time. So think how they drove this whole market with low rates. That's where all the inflation comes from. So after, in 2020, when they started to go from June 2007, but right around 2018, they decided, we got to raise the rates a little bit here. Because we got all these rates down to near zero because we print money, and we go and buy treasuries. So we got a lot of inflation here. So when COVID hit, they dropped the rate from 1.58 down to 0.08. Can you imagine? To zero. And we had a rally from 2020 up to January 2022, like 50%, 60%. Market went nuts. But then in January 2022, inflation reared its head again, and inflation went from 0.08 to 3.8. Okay, now think about this. This whole market from 2008, 2009 to 2022 rallied about 600% because we were near zero rates. They started to raise rates in October 2022 from 3.8%. Wow. All the way up to 5%. Now we're just under that 5% right now. But how could the market rally from October 2022 to where we are now? What is that, Willie? From around 350 to 500. What is that? About a 50% rally on high rates. It shouldn't have. Because they tell stories. It's always the storytelling. Inflation's down. Great earnings. Look at the AI. They always come up with a story. So what do? Should I buy it or shouldn't I buy it? Gee, the valuations are insane. Should I buy it or not buy it? You make that decision on following the money. You don't have to be worried if the stock market went up 50% from October 2022 to where we are today. And even though rates are up, I'm talking about the Fed rate is up, you don't need to worry. Don't even focus on that. Don't focus on inflation. Don't focus on earnings. You haven't got to worry about how valuation. You haven't got to worry about earnings, if they're bad or good. You don't have to worry about manufacturing. We do have good manufacturing jobs, bad manufacturing jobs. You don't have to worry about any of those fundamentals. You don't have to worry about the company that you're buying. How's the performance of the CEO? How's his free cash flow? So he can buy stocks or get his debt down. You don't need to know any of that. It doesn't matter what the economy is. In the long run, it doesn't. As long as the institutions, as long as the hedge funds, the biggest banks, as long as the ETFs, pension funds, as long as all the big institutions are buying and they all follow each other. As soon as the banks start buying, everybody buys. All those institutions follow each other. So you want to follow them because you're following the money. And we have the chart that I designed 25 years ago that follows that money. It's a color-coded chart. You can use it free for 10 days. But my point is that this rally that we've had since October 2022 is going up in the face of inflation. It's going up in the face of, we never had such a span of time where we had the, I keep forgetting it, the inverted yield curve thing. I don't know why I keep forgetting it. We've never had such a span of time where we had this inverted yield curve for so long. And that's why they always lie about the job numbers, because what they worry about is when you have that kind of a span and you've got a recession, what happens after recession? Jobs get slaughtered. So look, follow the money, and as long as you don't go long and short, you always make money if you just follow the money, not the noise. Check us out, philsgang.com. We have some big plans.
You have been listening to Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.
It's up to me.